don't even know what it costs. I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, I can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year.
All right, let's do this. Good morning, everybody. Welcome to the morning show here on Stock Market TV. Spencer, JC, Steve, Alfonso, full house, full crew. We're back in action. Let's see what we got here. On my list today, Oracle, Apple, Goldman Sachs, a few other randoms on there as well. There's a debate tonight. I don't know if we'll talk about that. I hope we don't talk about it too much, but I don't know. Maybe we will. We'll see what happens. New guest on this show. I love getting new guests on this show. Arthur Hill, a chief technical strategist at Trend Investor Pro, will be on the show at 9. He brought with him a few charts. We appreciate that. And yeah, that's what I got going on here. What up, chat? How we doing? Good morning. Good morning. Let's go. And hit that like. I would appreciate that. Here we go.
All right, we're back.
You're back. Did I just hear Art Hill? Wow.
Art Hill, man. I have been an Art Hill fan.
Wow.
I have a hard time remembering not being an Art Hill fan, actually.
One of the first guys I read
too.
his blogs back in the day.
Oh, all right.
Shout out Art Hill. Shout out to Belgium.
Yeah.
Home of the fry and the waffle.
I almost had a beer with them when I was out there. We tried.
They have those in Belgium. I don't know if you heard.
Yeah.
It's a thing. I just want to give a big shout out to New Jersey. I feel like New Jersey doesn't get as much love as it
You
should.
said this last week, but yes, thank you.
Man, I am on some Jersey kick, from the Taylor ham to the non-communist regulations when it comes to alcohol distribution. I live in the state of Pennsylvania. So like, where restaurants, stores have to go through the government, like this is fucking like China or some shit. New Jersey, anything goes. What do you need? You need Burgundy, Bordeaux, whatever you want. So shout out New Jersey. And the beaches in Stone Harbor and Avalon in September. Oh man, you know what it reminded me of? It reminds me of like San Diego, like all year round. You know, it reminds me of like California. You know, cool mornings, cool evenings, hot, days.
I don't think you might be the first person to ever compare New Jersey to San Diego.
Hey,
that's a new one.
He said it. The man said it. I mean,
I've spent a lot of time in California.
I didn't say it.
It was magical, bro. Seriously. For those of you who don't know, get down to the 7 Mile Island. You got Avalon on one side, Stone Harbor on the other. Oh, September, man. All the kids are back at school. August is amateur hours, you can imagine. Spencer's got it right. He went afterwards. He knows how it's done. Jersey veteran.
Always go after Labor Day. Always go ahead. That week is the week. Anyway.
Had the whole beach to ourselves, man. The kids running around the beach chasing the birds. Oh, man. So beautiful. Yeah. Shout out Jersey.
Spencer's a Jersey man. I'm a fan of Jersey. I like Jersey more than most. But I think both of us are finding this bit hilarious.
I lived in Hoboken for 2.5 years. That's 30 months. Does that count?
Yeah. No joking. Yeah. Hoboken, no joking.
Yeah,
good times. So, it's a New
Jersey. New York. It's really New York, but
yeah, more or less.
It is, but then go to Hoboken and you'll see how Jersey it is.
It's cheaper in New York. All right.
All right.
Let's do it. That was fun. I enjoyed that.
I figured you would.
That's the wrong bumper. My bad.
All right, ladies and gentlemen. Nice job there, Spencer. Way to screw that up. Dow futures doing nothing this morning. Pushing 41,000 for the Dow Jones Industrial Average. Doesn't seem like a bear market to me. S&P 500 futures up 0.25%. That's 12 handles this morning, just under 5,500. Pretty impressive. NASDAQ 100 futures up almost 1/3%, up 50 handles. That's 18,750, well below that 20,000 level we were talking about just a few months ago. 30-year bond futures flat this morning, 126 really. Crude oil down almost a full percent, close to 68. Crude oil really taking it in the chin. Copper hanging in there pretty good. 412 for copper, down almost 0.5%. Gold up 1/4%, 25.40. Really been hanging in there, pretty flat for some time now. Silver just under 29, up almost a full percent this morning with the VIX back under 20, down to 19. Over in the funny money, you got Bitcoin flat this morning, 57,000 and change. Ethereum flat this morning, just under 2,400. Solana flat this morning, 135. Binance also flat this morning, 520. Total crypto market cap, Spencer Israel, 1.97 trillion, just under 2, with the Bitcoin dominance still above 57%. What stands out in this morning's futures?
Weak bounce so far, right?
Weak bounce?
Yeah.
Like the Dow flat? Like
This week, stocks are experiencing a weak bounce off the lows from last week, right?
a weak bounce? Wasn't the Dow 500 points yesterday? That's considered a weak bounce these days?
Listen, you could look at the Dow all you want. This is about the S&P and really more about the NASDAQ 100. The whole bull market has been. So the Dow, that's great. That's fun if you own those stocks.
Is it fun? Oh, because most Americans don't own the stocks in the Dow Jones Industrial Average. Are those not large weightings in humans' portfolios in this country, in America? No?
I would argue they don't own Walgreens to the same degree that they
Walgreens is no longer part of the Dow Jones Industrial Average, so you can move on now.
Intel, Cisco.
They don't know much of that either. Dude, Todd Sohn does a great job. He looks at like the smallest weighting in the Dow, kind of puts a time on when is it going to get kicked out. Intel was the smallest component, like 30 basis points of the Dow or something stupid. Right.
Yeah. Love Todd's work. No, but look, it's a weak bounce. Pretty much across the board. You need groups like financials and industrials to hang on here and keep trending well.
Okay, so hold on, just to be clear, this is the second day of the week. Second day of the week. And what you're referring to as a weak bounce this week after one day is one day of the Dow up 500 points, the NASDAQ up even more than the Dow. So you're like, oh, you can look at the Dow, but it's all about the NASDAQ. Okay, well, the NASDAQ was better than the Dow yesterday. I don't see what's weak about that. The S&P 500 also up more than 1%. So I would love to hear more about what's
the NASDAQ was down. The NASDAQ was down almost 6% last week. Okay,
it was up 1.5% yesterday. Is that not a good enough bounce in one day?
Bounce. It's nothing to write home about. You know that.
Nobody's writing letters home. You're commenting on how weak of a bounce it was after one day this week. The Dow was up 500 points. The NASDAQ outperformed the Dow. And you're sitting here trying to tell me, we're sitting here talking about practice. Practice, not a game. Talking about practice.
This market's on the ropes. That's the bottom line. I want more short exposure, less long exposure, more defensive exposure, less risk on stuff. I'm moving back in on the risk spectrum, right? Back towards defense. We're buying things like bonds. We're talking about.
I was going to say, speaking of not weak bounces, bonds quite the day yesterday with stocks ripping in everybody's face yesterday. Bonds up as well.
We're very long bonds here. I've been joking internally that I don't think All-Star Charts as a group has ever written so much about bonds in such a short time. I can't remember a time. Like, everybody's doing it.
2016 was a big one. Fourth quarter 2018, I was pretty obnoxious. You can go back, check the tape. It was pretty bad.
It's not just you this time is the difference.
Right. What about COVID? We were pretty balls deep in bonds going into COVID.
Yeah. No, it's there's information in the way we do our research.
How about this consolidation in gold?
Yeah, I was looking at silver today, and
last month this thing is just like.
Yeah, like what's the trade here? I was thinking about gold this morning. As much as I hate thinking about gold, when we have this conversation about less correlated trades, like gold is up towards the top of that list, right? I want to own more things like gold, and gold right now looks a lot better than most of the things in that group, right? Like, sure, there's real estate and uncorrelated trades like that, but in terms of like the commodities complex, it's gold and everything else. So we're looking at nat gas here, looking at palladium. I'm thinking that's kind of cute. Do we just go for silver instead? I don't know.
I like some individual opportunities in the mining names. We don't need to get into detail of those, but there are individual opportunities there, particularly the ones showing relative strength. There's some ancillary companies as well that might not be traditional gold miners per se.
Yeah, sure.
That provide some opportunity there. So keep an eye there. Let's go over some of these massive tops. Let's start with the big one, front and center. This one, everyone's talking about this one. If the bull market is already over.
I think this goes on your list, JC. The list that you were sending me and Fonz. This should be on.
Yeah.
The SMH SPY, sure.
Hold on.
It's offense.
So I'm giving a presentation for Bank of America on Thursday on intermarket analysis. This is only the VIP Bank of America PMs or something like that. I'm like, who's going to be there? The amount of security to get into this, the amount of signatures that I've had to sign off on just to present at Bank of America. I wouldn't do this if it wasn't for Paulie, right? Paul Sienna, if it was anybody else, I would just tell him to fuck off. It's such a pain in the ass, but Paul's like, boy, I'll do anything for him.
Was dealing with BAC's compliance department easier or harder than getting into the country club?
They let me in the country club. They still haven't kicked us out. A few close calls there, but we're still there, still going. My brother-in-law showed up at the tennis court without any sleeves on. That was a big no-no. Can't do that apparently. Smoking cigs, drinking a iced coffee, walking into the country club. Yeah, no. Big no-no. Okay, so this is what everybody's talking about. We're looking at semiconductors, which are the chip stocks, right? And then we're looking at semiconductors on a relative basis. Everybody's telling me this is a massive top. The bull market is over. Semiconductors are the catalysts that are going to bring down the entire house of cards. Do you believe it?
That semiconductors are? Listen.
Is this the bet you want to make? Is this the bet you want to make in the middle of a bull market?
Here's the problem.
Or is this not the middle of a bull market after all, and the end is already past us and collapse coming, house of cards falling?
I got something good for you. This is follow along. It's okay if one of these lines starts trending lower. The black line starts trending lower. It's okay. It's not okay if the candlesticks up top, so SMH on an absolute basis, starts trending lower. Right? So the one on the bottom here, that could be a top. And I don't think it, has to speak to the end of days of this bull run. If the one on top is a top, though, I think that's a real problem, right? You don't want to lose the leadership groups on an absolute basis. They don't have to outperform the entire cycle. And actually, it's rare for, a group to outperform in the way that semiconductors have been outperforming for the entire cycle, right? So I think losing leadership is okay. You can't lose them on an absolute basis, though, right? You don't want to see the one up top end up being a big distribution pattern, because that, to me, I think would be very bad. Yes.
Let me ask you this, Mr. Strazza. Does it make matters worse than on a relative basis it's leading to the downside?
Well, here, I don't know about that. What I do know, though, is more often than not, these lines will move in the same direction and complete similar patterns, right? So what we tend to see is the relative trend lead the absolute trend, break down from a pattern like this, and then the absolute trend follow, right? So the scenario that I'm outlining, that's okay, right, where one of them breaks down and the other one hangs on, probably the lower probability outcome based on how much we've been looking at relative strength charts our whole careers. Would you agree? It happens, right? One could keep going sideways while the other one breaks down and is moving lower and to the right. But
I think that if the bull market is over,
yep,
and the whole house of cards is about to come down, semiconductors are going to be a leader to the downside. That's what I think. Can we throw up the new slide 3? The new slide 3. Let's start from scratch here on this deck there, Mr. Spencer. We've always talked about semiconductors as being a leading indicator, not just for the market, but for tech specifically. Not just now that technology is, that that semis are cool. All the
Mm.
kids are talking about the semis these days. We've
Mm.
always spoken to them like this. Here's consumer discretionary.
Mm.
Also, one of the most important, if not the most important sector in America. Definitely up there. We are in a consumer-based economy, is what I'm told. Consumer-based, right? Is that right, Strazza? You know better than me. That's right?
Mhm.
That's accurate. So if
Mhm.
this is a consumer-based economy and
Mhm.
consumer discretionary completes a massive decade-long top here on a relative basis, probably not so good for an economy that is so dependent on the consumer.
Mm.
Is that an accurate assessment here?
That was good.
That was good, right? You see what I did there?
That was good.
Mixed in the economy,
Yeah, yeah.
fundamentals, right? You saw that? That was pretty gangster right there.
You sound like a real economist.
Well, I'll try. I'm gonna go hang myself now.
Okay.
Can you next chart, please, Mr. Spencer Israel? What if this is not a massive decade-long top
Uh-oh.
in consumer discretionary for a consumer-based economy, and they just dig in and they rip them from here? Then what?
Yeah. Yeah. Good.
In bull markets, which one is more likely? A massive top, decade-long top in the consumer, or they buy in and dip them?
So this top started. Yeah.
Started at the end of 21. End of
Yeah.
21.
My problem with this is just that the equal weight relative trend looks so different. And there's so much Tesla and Amazon going on in here. It's like
And the Home Depot.
Yeah.
10% Home Depot, that ain't nothing. Half the index is the Home Depot, the Lowe's, and the Amazon, the American Amazon, the OG Amazon, not the Kazakhstan Amazon. Next chart, please, because we could just dig in, right? The deep dive, as they say, deep dive. Ready? Two charts. Ready?
Yeah.
Discretionary versus the S&P 500
Look at
on
this.
a weekly time frame, putting in a series of lower lows, which is no secret. However, momentum putting in a series of higher lows. Next chart, please, because
I love you.
I love this on multiple time frames. See multiple time
this-
frames, weekly, now daily, lower lows in price on a relative basis, higher lows in momentum. So the question becomes, is momentum here a leading indicator for price, or because when we see these divergences not develop into reversals, holy shit, look out below, right? So they better dig in and buy them, or else. Do I have that right? I think we can all agree on that one, right?
I think the starting point here is flawed. And I think you want to be careful to not draw broad market conclusions on a fund that's 50% in 3 stocks. I think this ratio tells you a lot about 3 stocks. I don't think it tells you about
the very important stocks.
Yeah. One of them sells.
Is there a more important stock for a consumer-based economy than where consumers spend all their money, which is Amazon, who's at my house every day?
Dude, Tesla's a weird one.
I don't know if your significant other orders as much shit on Amazon as mine. But
probably.
Yeah, probably.
Probably.
It's aggressive. This, I mean, we're giving the Amazon guy Christmas cards and shit. I mean, this is ridiculous, you know?
Thing to do.
I mean, they're here every day, you know?
I don't know. Spencer, what do you think?
Spencer, want to weigh in?
Is he talking to me about is he talking about consumer stocks, or is he talking to us about 3 stocks?
Well, if you're talking about the XOY right there, why not go the equal weight version, right?
Because we don't live in an equally weighted world, my friend. We live in a cap weighted world. You see,
I do agree with you, JC. If
everybody, no matter how hard they worked, earned the same amount of money, that's called communism. You see, in the stock market, it's the same thing. The larger, better companies should carry a more significant weighting.
I do agree with you that Amazon.
I think Amazon probably has too low of a weighting.
Amazon is in the top 5 of most important companies in this country in terms of economic activity, right?
Don't disagree.
For sure. No one argues that fact.
All right. So shouldn't it be even more than 25% of the consumer discretionary sector?
No, because
I don't know, and
here.
I don't know.
The right way to analyze sectors from a broad sector perspective is on an equal weight basis.
The right way. So
Yes.
on a market cap weighted basis, it's the wrong way.
If you are trying to make an allocation decision for like, should I put more money into XLY? Then yeah, you want to look at the chart that you're looking at. If you want to make a call about the broader consumer discretionary sector, don't look at a ratio chart whose numerator is denominated 50% by 3 stocks. That's all I'm saying.
All right.
I'm not saying crazy things here. It shouldn't be controversial.
No, I mean, it was just a little friendly conversation, you know?
You know how I feel.
I know.
That was good.
Yeah, just a little friendly conversation. No big deal.
All right, we got Kenny.
Bring him out. Bring him out.
Bring him out.
It's been a long time coming. They ain't cuffing my clock, they tug it. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house.
Kenny, what are you doing?
Oh,
I think I'm just gonna move to Vegas. That's it.
so hold
I
on.
got it
So
all figured out.
hold on. The bet is just always bet against the Jets.
I had every under you could possibly put on. The only one I didn't hit on was I had Jets not to score in the first quarter on a 5 parlay, which kind of blew it up. But I had every under you could put on as far
Good
as
job.
Rodgers was concerned. Points scored, final score, everything you could bet against the Jets. That's how you do it, baby. Live in
Always bet
reality.
against your
Just
team.
like
You're guaranteed
trading.
to win.
They're so awful. I mean, after that Giants game, I thought maybe could the Jets be as bad? Yes, they can be. So it was disappointing, but it was expected.
We'll see. Full disclosure, I did not watch the game, so I don't know
Isn't it
how it was.
hilarious? I was just giving Jersey shout outs, and there's no team that is more Jersey than the New York Jets. Can we agree on that?
They're actually more Long Island. They're like tied to the Mets' fate also.
Yeah, they're pretty Long Island because they used to do training crap. Freudian slip there. Training camp over at what's that school there in Long Island?
Yeah, the
Hofstra.
yeah, Hofstra, where I used to get my Greek lettering done on my champion sweatshirts a long
Let
time
me
ago.
tell you something. I partied at Hofstra a few times. That's a good time out there.
It was a good time, yeah.
Yeah.
What's shaking, boys?
You tell me what's on the move this morning. Talk to me.
I got to tell you something about yesterday. You know, I came in, just sitting back. I don't like, I saw Brian Shannon's post also, something about not trusting a gapped up market in a downtrending environment. I was with him and I just sat back and I waited and we got amazing short opportunities. But it was amazing that the resiliency of the market showed up again and you were able to trade. You had 3 intraday reversals in one day. So I'm hoping we get more of that action. I love this environment that we're in right now. But, as far as focusing on a couple of names, an old name here, VRAR. I know it's under 250, but it's getting absolutely hammered. This is just want to point this one out because of the fads we go through, AI. But this was, I believe, the LiDAR when that was all the rage. And any LiDAR stock was going crazy. I'll show it to you for a second here. Get the window up. If you can put this one up there. This one's in play right now.
Trade, Kenny. It doesn't trade.
Right. Just garbage. I'm just pointing it out because, again, the fad that we were in, the AI, could it be a fad? But there are going to be stocks that they pop and they drop. And then when they roll over and die, they don't come back. There are just going to be those select fews that become the NVIDIA or the decent stocks. But, going back to real names, it's going to be Oracle today. The stock popped on earnings and it's just consolidating up at these upper levels. So again, it doesn't really trade that well, but if it comes out of this range from the upside, I'll look to play a little fade on it, try to make 2 or 3 points. Because if it does break down, you got about 2 points to the downside. But, again, going back to the standard trade lately, crushing UVXY is fun. Okay. This product is built to go down. And when you look at this chart, you had the classic trade, UVXY was getting crushed and you wanted to be long in the morning. But then suddenly, when it wakes up and trades like a normal stock, that gives you an indication that the market's about to get weak. And it did. I mean, look at basically the opposite correlation here. There's the UVXY rallying and here's the Qs. So basically it's the same chart inverted. So it was a great day to trade. And again, I'm just going to sit back and wait for some opportunities. They're always out there, especially because we sit here in the chat room for basically 4 hours a day. But yeah, I mean, I'm kind of in wait mode already for earnings season. So it's kind of what we're doing.
So you're more of an earnings guy than I am, of course, Kenny. Spencer's as well. Are we pretty much done with the season?
Yeah, we're only getting like 1 or 2 a day, which is fine because then you could concentrate on what came out. But as soon as the banks start coming around, I think it's almost as early as October 10th or October 11th. I'm not too sure what the day was. But when you start to have Citibank, JP Morgan, oh yeah, then the influx comes and then it becomes too many. So again, you try to stay focused on 4 or 5 stocks each day. So I don't mind when there's 1 or 2. And again, you could always do some pin action. So if Oracle's strong, you could take a look at the enterprise software stocks, that type of thing. But yeah, I mean, we just sit back and wait. And that's been a great attitude to have towards this market.
Give me one more, Kenny. What's on the move?
I'm going to keep looking at Trump. You had finally some motion in this one yesterday. Finally, it woke up a little bit. And again, the pre-market was insane. I don't know what that was about, but it sold off right before the open, and then bang, through the VWAP, you got paid on the upside, and if you're able to get a short off. So I'm going to watch this one today again and see what's the story. Right now, you got those buyers again. Looks like 1750's got some buyers down there. But, again, big fan of that space trade. The ASTS, the rockets, and the robots are still in play. ASTS provides you a winning trade almost every day. And again, what I like about it is both sides. So again, this market, you're able to trade both sides of most stocks, and that's the environment I love. So hopefully I'll see more.
Yeah, no, this is, think about that gap fill from the beginning of the year. You had that breakaway gap in mid-January.
Right. Yeah.
And we just filled that right now. So that's a good call there, Kenny, on the Trump. What's it doing here pre-market? Nice call here, Kenny. Seriously.
You got some buyers down there yesterday, and again,
up another 2% here pre-market.
Yeah, I don't mind. I don't mind trading the stock down here, but again, be careful. Again, I'm just a lowly trader. I don't have any positions, but I am enjoying that Palantir. By the way, again, if I did own stocks and other than Rambus, Palantir would be my second choice. I like that. Hopefully that stays above 30 and we can build from here. If you guys
what an absolute monster that Palantir has been.
Yeah, I think you got a $50 stock right there.
Hold on, you taking any bets on the we're gonna talk about it in a minute, but you taking any bets on the on this thing that they're doing tonight? The what is it, debate?
You know what? I'm probably not gonna watch because I'm going to see Jane's Addiction today, reunion tour. Come on.
Wow.
So I'll be in the city.
Blast from the past.
Yeah, so I don't know if I'm going to get a chance, but if I had to bet, I don't know. I'm going to look at the thing, the over under on a lot of people didn't realize comments. I don't know. I don't even know what to expect, but I'm going to try to get there.
If Trump says witch hunt plus 130, that's not bad.
Yes, the keyword overs. That's what I was going to look at.
I think it's if his last word is communist, it's like plus 2,000.
Nice. Is that on DraftKings? I mean,
I won like 7.
Yeah, it's on DraftKings, Kenny.
It's so crazy. You could bet on literally.
No, I use Bet Online for this sort of thing.
Yeah, I was joking.
My wife saw my account balance on Bet Online. She's like, "What the fuck do you have so much money in there for?" I was like, "I hit on China in the last debate. China, first country mentioned."
It is amazing. It is amazing how many things you could bet on.
She's like,
now.
"You have how much in there?"
By the way, DraftKings, I don't mind it here. You usually see some strength at the beginning of every football season. I haven't checked the chart yet, but yeah, it's showing some strength. I'm surprised the stock's not in the 50s yet. I love me some. I use DraftKings. For me, it's ease of use. I like the website. So plus live betting, man. I think it's changed the world. It's changed the world. I love it. Especially when you watch the Jets and you have hope. They were up 7-6, and then reality starts to set in, and you could still get odds right there. And it was only minus 260 at one point. I know,
Kenny, but think about the families being affected here from the bookies that are going out of business. Just think about other people. It's not always about yourself. Just this new technology and these new regulations are just destroying the bookie industry.
I know, Rocco.
And I don't know that I'm okay with that. Have a heart, Kenny.
Yeah, Rago from Brooklyn's all pissed off at me. I don't call him anymore.
Right.
All right, Kenny, we'll let you go. For everyone that's watching, that's in Kenny's room, we are aware that we're having some tech problems today. We're working through that. So we'll see you there, hopefully. Kenny at the open.
We'll figure it out. All right, guys.
Figure it
I'll
out.
see you soon. Good luck
Yo,
today.
dude, some of these guys that, like, you know, laws change and like they can't move on. The guy that I used to buy weed from when I was an intern 22 years ago in the city is still texting me like once a quarter. Hey, JC, if you ever need anything, 20 years later, this guy's still texting me.
Hey,
This is when
man.
you used to have to page them, that you would page them and then they would call you back. Like, this is the same guy that hasn't moved on. It's like, bro, I'm not buying any weed from you. Like,
You say he
move on.
hasn't moved on. I'm saying he's trying to keep his potential customer list warm.
Dude,
I
it's
was trying
crazy. I
to
still
maintain the
right,
engagement.
exactly. I still get contacted from this guy.
Want to make sure you don't forget about him because you
What was
never
his
know,
name?
right?
What is his name? I have him saved on my phone as Mr. Smiley Face, but that's not his name.
Oh, like I thought you were gonna say like do not respond.
Yeah, that's so funny, dude.
All right,
He works hard, man. He works hard.
That's interesting. Hey, let's bring on our guest. Why don't we do that? Arthur Hill, Chief Technical Strategist at Trend Investor Pro. First time on the show. So JC, be nice and let's do it.
Let's do it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Art Hill in the house. What is up, my man?
JC, how you doing? Spencer, hey, it's been a while, my man.
Dude, what
Hey,
a pleasure. What a pleasure.
Steve.
Strazza and I were just commenting before that you, sir, were one of the first technical analysts that we ever read, ever. And I bet that I bet that you've probably heard that before from others.
I have heard that because I started with stock charts and did that chart school. So that's where it all began.
Right.
And we were all free at that time, and it was all around.
You know, I've stolen a lot of your work as it relates to momentum analysis, really like basic rate of change as an indicator. You want to just start off talking about how you use that in your process?
Well, rate of change is, I'm using more of a longer term rate of change these days. I've pretty much a longer term, or well, long term. What's long term? You know, you can define that different for everybody. But I'm looking for longer term momentum and looking out about 9 months, 200 days. You know, I want to get a little longer than 6 months, a little shorter than a year, to try and catch that really strong momentum that's coming on the radars of the big players. And if you can find that kind of momentum and then look for your tradable pullbacks along the way.
So when you scan, is it as simple as using a rate of change over, you know, XYZ period?
Well, no, because the problem is you need to water it down a little bit by saying dividing by the standard deviation, a 20-day standard deviation, to kind of make it a volatility adjusted rate of change is basically something I'm trying to do to level the playing field.
The highest beta stocks will naturally rise to the top, right, during rally phases.
Yeah, well, and you know, NVIDIA is going to rise to the top because it's just astronomical in its rate of change. Also, the standard deviation is high, but the rate of change is high enough to offset that higher standard deviation. Whereas staples and utilities don't often come across the scan, except, of course, in the last few weeks. They have really picked up, you know, utilities especially.
What does that mean, Art? When you start seeing utilities and real estate stocks and staples at the top of your relative strength scans, do you nice about that?
It's got to be put in context, of course, but you put it in context with relative weakness in technology, in semiconductors. You look at the Russell 1000 growth relative to the Russell 1000 value, you know, that ratio has turned down. So you're seeing basically a risk off in that
What about
regard.
but what about the 52-week highs in financials on a relative basis? Is that historically so risk off?
Well, man, I'm not a big fan
Not to
of.
be a ball buster, Art, because you know I
No,
love you.
it's
But
all right. It's all right. You got new
explain
highs
to me,
in
is there any historical
industrials.
context with financials being such a defensive asset where money flows when it is in panic
Is it
just
just
prior to a massive collapse? Is there precedent for that?
or is it just an interest rate story right now?
Well, I don't know.
Oh, now
what
we're
the-
using excuses from the bond market. You see how this
Yeah.
works, Art?
I don't know what the story is because I'm a technical guy, but I do see the new highs in the RSP, in the industrials, in the financials. But it's a game of waiting, and I think what am I waiting more? Well, I'm waiting more this relative weakness in technology and semiconductors and consumer discretionary to a certain extent carries more weight for me. Because I think the market in general does better when tech leads and semiconductors lead. Sure, there are
Art,
spots.
not to be the old man in the room. I know we got
Where
a lot of
is
young kids in the chat. Get that? I'm the old man. See, you
Yeah.
look good. You look good. You look
Thank
great.
you, thank you.
I remember a time not too long ago, about 2 decades ago, where utilities led the entire bull market and semiconductors underperformed and were actually an afterthought. This was that 2003 to 2007 period, bull market.
So they led after the dot-com bubble burst, and then the utilities led coming out of that low. Man, you're quite the historian, JC. I'm impressed.
Yeah, you know, I've looked at a chart through my day.
To,
You know, all those Art Hill stock charts lessons. Hold on, let's take a step back.
That was a weak bull market.
I was there. Well, you were in diapers. I was there. Trust me, these parties there was nothing weak about these parties. There was
it was the housing bull, man, back then.
Yeah. Strazza's out of his element. Donnie, you're out of your element. Art, some of the folks on the chat are chiming in, wondering, they almost feel guilty because they don't know who Arthur Hill is. So before we start attacking you with more relative strength questions, can we just take a step back and just explain why Strazza and I are in such awe and such huge fans of yours? A little bit of background. You don't sound like you're from Brussels.
No, I'm not. I'm originally from Texas, so I'm a horn. Hook 'em horns.
There you go.
We're up to number 2.
Nice win this weekend.
Yeah. Put on a good show against Michigan.
Are there a lot of college football fans in Belgium?
Oh no.
All right.
Can you find the games at a bar?
Art Hill's at the bar by himself, rooting for Texas.
So, well, no, we can of course stream the games, or we've got streaming channels here, so we can get them, but they're usually on a little bit too late.
Yeah.
Like the debate, it's going to be way past my bedtime. I will not see.
It's past our bedtime. Like 9 o'clock at night. Why do they have these things so late? Terrible.
But anyhow, I way long ago, and did we lose? Oh, I think we're back.
No, you're all right.
You're good.
Push through. You'll be all right.
Okay. Anyhow, and I was with stockcharts.com from the beginning and built out the chart school and did commentary for them for a long time. And that's where, I did a lot of the trend work, the momentum work, and the relative strength work, running scans. Then about 10 years ago, though, I kind of took a turn to the dark side and I got into the systematic trading. And I use Amy Broker a lot now to develop systematic trading. And that is based on A, are you in a bull market? Okay, then you trade stocks. B, is a stock in an uptrend. And C, you do the momentum leaders. And it's a rotational strategy that goes in and out of the momentum leaders. So you have the top 10, and when they drop out of the top 20, you move on.
Are you basically just programming a system on your brokerage platform and then pressing play, and there's little to no maintenance from you? Or like how much of a human element is involved in your process still?
Well, all the human element is in the development.
And
it's a lot of trial and error. And of course, you don't want to curve fit your system. You want something that's going to be robust and stand up to the test of time. And you want it to be simple. It's very simple. There's only like 3 rules in it. You know, your market trend filter, your stock trend filter, and then your momentum rank indicator is probably the most important one. That's the secret sauce, if you will. So you want to be able to ride those momentum leaders. The S&P 500 strategy is doing really good, but the NASDAQ 100 strategy is struggling a bit this year because of the wicked rotations we've seen.
Yeah. They've come hard and fast when they have. The selling in semiconductors has really changed over the past couple.
Definitely. So we'll see. I mean, maybe 2025 will be the NASDAQ 100 year.
So do you want to talk about your journey a little bit? Because you weren't
I
always
was gonna say,
guy.
Why do you call it the dark side?
Yeah. Talk about the transition.
Why are you hating? Why are you hating on the quants?
Talk about your transition kind of from more discretionary and moving over to systems based.
Well, basically, I love looking at charts. I love scrolling through charts. But at some point, you're looking for a more automated and systematic approach. And I take a systematic approach when I look at the charts. You know, you look, what's the trend? Is it leading or lagging? All right. Is there a tradable pullback on that chart? And so I wanted something that was more systematic and easier to run. And this is a weekly trading strategy and is basically looking for something a little bit easier to run. And so you do all your work, basically building and testing and tweaking the strategy. And once it's built, then you run it. And that's basically, you know, punching keys every weekend to enter your orders. And the alternative is basically looking at charts and making discretionary calls every day or week.
All right, what about moving averages? Right? You know, for many, is this kind of like, was that the gateway drug to the more quantitative approach? You know, all that work that you were doing back in the day with moving averages, was that part of that transition?
You know, still to this day, I use the 200-day moving average because I'm mostly involved in large caps. I'm not really looking at mid caps or small caps. And large caps work better with the 200-day moving average. The S&P 500 works great with the 200-day, but the Russell 2000 does not work great with the 200-day. So it's not even worth using that.
And what does that mean, work? Like how do you define what works and what doesn't work? What do you mean by that exactly?
Well, the S&P 500 is more trendy. You know, it develops these big trends up, trends down in 2022, whereas the Russell 2000 is much more choppy and a lot more whipsaws.
Is that in the current cycle, or is that always in your work?
That is pretty much 20 years. I mean, that's enough for me. I'll run a 20-year back test, and that includes, you know, more than one market cycle. That's the key to a robust back test, is you need to have a couple of market cycles.
I like that. Do you think some people go back too far with the back tests? I like 20 years.
Yeah, I like 20 years. You know, 2003 is pretty good. Sometimes I'll go to 2000 just to say, what happens if I started right before a bear market? You know, that's a good test for your system.
All right, you don't take your interest rate charts and your gold charts back to the birth of Christ? Like you're not?
No.
I like those charts. Those are cool.
No, those are fun, but you know, my years are numbered. I can't
not
trade
that
those,
actionable.
You know?
That
I don't have a
3,000-year chart of
time
gold
horizon.
I do want to say, just back to charting school real quick, because we have a lot of, you know, beginning technicians watching this show every day. People who are getting into, you know, technical analysis on the ground floor. The charting school that Art did on stock charts, that blog was so incredible because he would take an indicator, he would link to a description about the indicator, then he would show you exactly how to use the indicator, you know, in practice or in his process, whether it's a rate of change indicator, an RSI, you know, MACDs, all of that. You know, you went through so much. So I think that's just a great resource, a good starting point for people who are learning technical analysis. Is all that stuff still free on their blog?
It is. The chart school is still free, and a lot of those articles are in their original form.
Yeah.
So one thing, if we go back to the moving average and the long-term moving average, one thing I noticed is, especially with the long term, one of the keys is to reduce whipsaws. And so I do two things to the 200-day moving average to reduce these whipsaws. A, instead of looking at the close crossing above and below, Just use a 5-day moving average. And that gets rid of a bunch of whipsaws. And the second thing is to add a signal threshold just above 0 and below 0. So the percentage difference between the 5-day and the 200-day. So if the 5-day is 3% above the 200-day, you've got an uptrend. If it's 3% below, you've got a downtrend. And in between is kind of gray zone. But you take that bullish signal when it crosses above 3%, you stay with it until it crosses below -3%, not below 0. And that can help get those whipsaws out of the way and keep you on the right side of that bigger trend. And that's a good filter for, say, trading those pullbacks within the trend.
And you're using the 5-day and the 200 for that?
Yeah, the 5 and the 200-day, just to get my long-term bias. You know, that's the first filter. If the stock doesn't pass that filter, move on.
Yep.
Pull up the chart that Art brought with him here. This is describing exactly what he's saying here. We're looking at that 18-month bull market, couple whipsaws.
Brian Shannon's a big 5-day moving average guy too. He doesn't want to buy anything.
But Brian Shannon's looking at a 5-day moving average, but breaking it down to 195 10-minute time frames.
Yeah. He's a little extra with it, but it's
195. That's almost 200.
It's the same idea. Yeah,
but it's not quite right, because I think it's 195 10-minute time frames is 5 days, right? So 6.5 hours.
He's big on candlestick math. He's a little.
Brian is. He got me hooked on the candlestick math.
Yeah,
and Fibonacci.
Yeah. Yep.
Fibonacci, Liberace.
So this is the 5-day SMA of what on the bottom?
No, this is the composite breadth model. This is a model that we use at Trend Investor Pro. It's based on breadth indicators from the S&P 500 and the S&P 1500, which includes mid caps and small caps. And it kind of tells you when to be risk on and when to be risk off. And say, when do you want to start buying stocks and not buying stocks? Stop buying.
What kind of breadth indicators are in there, Art?
So you got percent above 200-day, percent above 150-day, percent above 100-day, 52-week highs, 52-week lows, and then a thrust indicator.
And are you looking at these more for overbought and oversold conditions, or are you analyzing what type of regime the market is in? Like, how do you think about these market breadth indicators?
Market regime. Basically, when these breadth indicators are strong, it's a good time to be picking stocks. The odds are more in your favor. And when these breadth indicators are weak, it's not a good time to be picking stocks. And you want to be careful, be more in cash, be more defensive. Now, we did get some whipsaws, as you can see, at the beginning of 2022, but it was mostly red through that chunk from April into October. Yeah. Some more whipsaws because it was quite a whippy time within the S&P 500, because mid caps and small caps, again, they're kind of the culprit when it comes to whipsaws.
Well, it gave you a good signal, not just in early 2022, but also right before the pandemic, which I know a lot of models missed.
It did go in late February.
Yeah.
Those breadth indicators really broke down in late February, and you know, it was a big V bottom, but you would have missed the whole V, which would have probably saved you a few stomach ulcers.
Yeah, you would have slept a lot better through those.
Yeah, and then it turned bullish at the beginning of December. It didn't get the exact bottom, and it's a trend type momentum indicator, so it needs a lift off to get bullish again. But we got that lift off in November, and it turned bullish in early December, and it's still bullish.
You're talking about this cycle.
This cycle, yes. Sorry.
You know, I'm glad I when I asked you about this breadth in particular, because you're creating an indicator from it, and I think, in my opinion, you're doing it the right way. You know, you look at something like the CNN Fear Greed Index, and these serial killers are using market breadth as a contrarian indicator, trying to fade strong breadth. Right? Go to the CNN Fear Greed Index. It's like, I don't know who came up with this. It's really, really weird. There's a reason why it doesn't work. Like, they're using sort of trend following models from a contrarian perspective, and they're using strong breadth as a negative, right? You're using it as a positive. Like, you're using strong breadth to identify a bullish regime. So like, when I see what these CNN people are doing, it's just very confusing. Like, of course it doesn't work. Why would it work? Right? I think the way you're doing it is absolutely spot on.
Yeah. Breadth is an important part of the market. It's not always right, but again, it can keep you on the right side of the major trends.
It's a market of stocks, Art. Isn't it a
Indeed.
market of stocks?
There's an
Indeed.
excellent question in the chat here from Dawson. He said, in hindsight, looking at this chart, the question is how to know when we're in the middle of a whipsaw, right? So something like October of last year, Art, where this flips negative or flips bearish, the breadth model. Price action's nasty. We've been correcting for a couple months. Like, are you getting out and then getting back in? Like, how are you acting when you get that whipsaw?
So this is the model that is driving the strategies, the strategy that trades the momentum rotation strategy that trades stocks in the S&P 500.
Sure.
And so it will move to cash when this model turns bearish, and then it'll become fully invested in the top 10 stocks when the model turns bearish. And whipsaws are just the price of entry, basically. They're expenses that we have to live through if you're doing some sort of a trend momentum model. And you have to identify those periods when you think risk is above average and preserve capital so you have a higher base to start from when the market does turn bullish.
Yep. Yeah, there's simply transaction costs. Do you buy low, sell high, or do you buy high and sell high?
Well, these momentum models, they buy high and they sell higher. Now, as a discretionary trader, I'm more into the pullbacks. I'm looking at the pullback, say April was a good one. The August one was a bit too sharp for me, but I'm looking for individual stocks that have tradable pullbacks within a bigger uptrend. They become oversold, they have a falling wedge, they come back to a retracement zone, a 50% retracement or so, and they're setting up and looking for that breakout.
Right. Buying weakness in the context of primary uptrends. You said August was a little bit different for you. I had a similar experience. What was wrong with the way that we pulled back in August?
Well, it was too sharp down and up.
It's the semiconductor rate of change chart for.
If you blinked, you missed it.
Yeah. So you see basically a change in character in the tape and the way the sell-offs are occurring with these big down days, right? And all this volatility. We had the volatility spike into early August. And then you just say, okay, it's really from your gut. It's not a system that's telling you that, but you're saying from a discretionary perspective, maybe I don't want to buy this dip like we bought the other ones.
Well, yeah, from a discretionary perspective, I was doing a chart that showed the 21-day standard deviation of log changes. And it hit a 1-year high in July. You can probably get that on Y charts or somewhere. So we had a low volatility environment for a long time, over a year. And then in July, it got above 20%. Now it's come back down in August as the market has firmed, but that's kind of a signal that volatility is picking up. We're seeing tech, semiconductors lag, and we're seeing a bit of that market mood change, if you will.
Yep. Oh, I like that mood change.
Yeah, mood change. I like that too.
You throw in seasonal patterns, which I kind of put on the back burner because they're not always something you can use. You have to use them in conjunction with other stuff. But you throw in September seasonals, you throw in an election year. The market doesn't care what happens with the election; they just want it to be over.
Right.
So leading up to the election, there's nerves. The nerves are fried. So September, October can be volatile months because of that. But no matter who wins, the market typically rallies in November, December. So anyhow, the call.
So you're expecting that year-end rally, Art?
I'll cross that bridge if it gets here, but right now we're in a bull market. We're currently correcting in that bull market when you look at XLK and semiconductors, Mag 7 and what have you. Software is holding up pretty good. FinTech's holding up pretty good. Cybersecurity is holding up pretty good. So I do think it's a correction within a bull market at this stage. And you say, well, when does a correction turn into something more? Well, that's why you have your models. That's why you have your 5-200 cross. If that goes below 3%, then we have a long-term downtrend on our hands. Maybe it'll whipsaw, maybe it won't, but you just take the signals as they come.
And Art, when it comes to market corrections, you know, can you just touch on time horizons? One of the huge advantages that technicians have and price behavior oriented folks have over other disciplines is the ability to analyze markets on multiple time frames, right? Short-term time frames, long-term time frames. You know, I look at the monthly charts. I have a lot of respect for these long-term trends for obvious reasons. I see new all-time highs in financials, industrials, materials, healthcare, utilities, staples, new 52-week highs in REITs. You know, it's all-time highs across the board, and not just the defensive areas, but materials, industrials, financials, right? So when you talk about how a market correction is underway, how would you quantify when that correction started? How do you think about that? And how do you think about what would make the correction worse? And on the flip side, what would indicate that the correction is behind us?
Well, I think I've got, you know, some downside targets just below those August lows. They're based on Fibonacci numbers, 50 to 50%, 67%. 67% is a down number, 2/3. So, you know, looking for those areas. And when you get down to those areas around the 200-day, 200 days a big battle zone. So when you get into that zone, then you start looking for some things that are showing like that short-term relative strength. You know, the market may be going down, but they're going up a little bit. And they're the ones that typically lead on the way out. But as far as if it's more than just a correction, well, then I would look at my breadth model. And again, as I said, that 5-200 cross for the S&P 500.
Love it.
Got it. And then what about from an intermarket landscape? Are you including any of the cross asset analysis in your breadth work and your you know, regime identification work at all?
No, not really. The intermarket, you know, if you look at a chart for gold, look at it for gold. You know, gold is just, I think Charlie Bielello called it an enigma. And, you know, gold is just frustrating if you try to figure out why it's moving. But the gold chart is bullish. There's no doubt about it. You know, it's near new highs. So take gold for gold, take oil for oil, take the dollar for the dollar. The stock markets, I think, you know, breadth is the only thing that I would use outside of price.
And at the end of the day, breadth is 100% dictated by price.
Yeah, they're price-based indicators, percent above 200 days. So
it's all still price, right?
Yes, yes.
You talked to John Murphy at all recently? Any communication there between you guys?
No, haven't talked to John in a while. It's been a while. Julius, I need to go see Julius because we live like an hour.
You guys are right there.
Yeah. He lives in Breda and I live in Mechelen, which is in between Antwerp and Brussels. So
he's got horses. Every time I talk to him, he's got more horses. He's just
yeah. He's got a farm, basically.
He's got a whole farm. I mean, look, see, let this be a lesson, guys. Your daughter wants to take, you know, riding lessons. Next thing you know, you're moving out of Amsterdam. You're moving to the country. You're buying horses. So careful getting your daughter horses.
Not just one horse. It's 2, 3, 4.
Good. He's got every time I talk to him, he's got more horses.
Yeah.
We got to get Julius back on the show. We got to get out to Brussels and hang out. What about you? When are you coming back to the States? You hang out here ever?
I'm not sure. I go to Texas periodically. You know, that's where the family is, Houston and Austin. So I typically end up mostly in Austin with a visit to Houston because Austin's a really fun place to hang out, let me tell you.
You know, I think Houston's underrated. I like Houston.
The restaurant scene in Houston is top notch.
You're telling me. I mean, I'm as bougie as they get. The food and wine in Houston, they're not. They got a couple bucks, those oil and gas folks down in Houston. They know how to spend it.
It's not just steaks, you know. There's more to it than that.
Houston's a real city, man. Houston's a real city. You know, Austin's cool for what it is. You know, Dallas has its charm. Houston's like a real city, though.
Yeah, well, it's a metropolis. It's just humongous, you know. But in Austin, you got the hill country. You've got the rivers. You know, if you go in the summer, you can go tubing down the river. The wonderful barbecue joints all over the place.
What is it? So, Louis Black, something.
Black's is one of the famous places. I think they have one in Austin, but they also have one, I believe, in Lockhart. That's the original.
Dude, black.
And you go
man.
in and the ceiling is pure black, because they've been smoking for 100 years there.
Dude, that brisket is no joke, man.
Yeah.
Oh,
Melts
so
in your
good.
mouth.
They don't make brisket like that out in Brussels, do they?
Hell no.
Hell no. They don't know how to do
No,
it.
no.
Good beer though, right?
Yeah. We've got good beer. West Flateda is the favorite here.
Is it?
Brewed by the monks.
Yeah, I love the beer where you are.
Monks, they don't talk. They got all the time in the world to make good stuff, right? So you got to trust a monk.
Yeah.
Nothing beats a Belgian triple. I mean, what a special beer. You could eat it with like a cheese plate and some meats. It's like wine.
You chew on it basically. They're real winter beers. They're not so good for the summer. But now that autumn is here or coming, not quite.
Yeah, it's not like a beach beer. It'll bog you down.
Yeah.
Well, you are truly one of the OGs in the modern TA space. I think you've been such a great teacher to so many of us. So this has been a pleasure. Thank you for all you've done and all you're doing.
Well
Well, thanks for having me, guys. I appreciate you reaching out.
Yeah, for sure. We'll have you back soon. Thanks, Art.
Okay, that sounds good. Take care, man.
Adios.
Later.
Art Hill, ladies and gentlemen.
Awesome.
Legend. Dude, legend.
There we
One
go.
of the first people who I read.
Yes.
So certainly instrumental, to my career and, kind of how I look at markets. Some people chiming in. Who's John Murphy?
Oh my God.
Look it up. John Murphy and Art Hill were maybe the only two writers at stockcharts.com 20 years ago.
They helped build that thing really early on. Like he was saying, he built up charting school, which was just a wonderful resource, I know, for a lot of us. Because back in the day, JC, you could speak to this. You didn't have many options to go and learn about charting on the internet. There were a couple great blogs if you could find them. But even trying to find a place to, make a chart and set up a format and look through charts was tough when I was back in college. There wasn't too much.
There was no trading view. There was no Koifin.
Oh,
right? None of these things existed. Now everyone's got a charting software.
Yeah, you used your broker platforms more than anything.
Yeah, I used Thinkorswim a lot back in the day. Yeah, that's true. Had to. I used Reuters, believe it or not. I was using these Reuters Quotrons. Man, those charts are ugly. I still have them. Remind you, I have a folder with like all these charts from like 06, 07.
It's amazing when the growth and popularity of technical analysis has really benefited people like us because the amount of tools that we have today versus just 10 years ago is absurd. Like it is a bull market for technical analysis right now. It's secular.
Well, I'll tell you what, it's certainly a bull market for bad technical analysis. I'll tell you that much.
That comes with it.
Yeah.
I have a story at recess. I can liken this to the keto trend. Because just because you bought a recipe book doesn't make you a good chef, right? No, but the point is
probably means you're still a bad chef.
The point is when something catches on or becomes trendy or becomes more popular, then it's great as a consumer of that thing, right? Because you just have more options. So they're doing big things with keto right now. They're figuring out the low carb pasta, and that's a really big deal. That's a huge
Strazza. Look at Strazza hopping on the program. You look good, buddy. You look good.
Talk about it later. All right. I'm good to talk about financials if you want to go there.
You want to start with Goldman?
Sure.
Is that a safe haven asset, Goldman Sachs?
You want to talk financials? We should start with Goldman. No, it's just that CEO was speaking at I think a sell side event yesterday, somewhere. Not really sure. Regardless, he gave some gave a negative outlook for the current quarter.
DJ Sol did.
Yeah.
Okay.
DJ Sol, they're gonna be taking some losses as they get out of the consumer credit card game, and also their trading revenue will decline. Is what he said.
They've been divesting from this new thing for years now, right? When did they cancel their deal with Apple? This time last year?
I will tell you actually.
So this was a coincidence that Goldman Sachs stopped going up at exactly the 161.8% extension of this base.
This chart still looks so good.
Was November? Was it November? November of last year, I believe.
Yeah. See, they're still trying to get out of this business. These big banks, they get so big, they want to do everything, and they do. They literally try to do everything. Some things work, some don't. And it goes back to it's the same thing we say about these big tech companies. When you get to this kind of size, that's the best thing going for you, is that you could take shots. Small regional banks can't, take a chance on a new consumer credit department. Goldman Sachs, it's like, oh well, that didn't work. Close it down.
I mean, it didn't work because they're pulling out. I don't think they really gave it much of a shot, but regardless, they're out. So trading revenue down, investment banking revenue still improving.
Here's what it is, Spencer, right? The big banks have a revenue mix where there's the traditional banking business, which is just lending, making money off of the spread, right?
Yep.
And then there's everything else. And in times like the past several years, when the traditional lending business is terrible, these big banks love having a revenue mix that's away from that, right? So they want more of not traditional lending. Then when the environment changes and lending becomes profitable again and net interest margins are growing, they wish that they had a higher revenue mix towards the lending business. So then they start chopping some of those extra businesses off, right? And it's just a cycle. It's a cycle thing. And the big banks have that flexibility, and they can kind of change that mix a little bit and adjust it over time to benefit more from whatever environment we're in. I think that's all it is.
That was good.
Yeah, I like that.
What else did you have to say about financials?
Let's hit these breadth charts. They're in the deck funds from yesterday. Financials just look different from a market internal standpoint. We can't say the same things about industrials. While I know industrials look good from a price perspective still, beneath the hood or underneath the hood, you don't have as much strength as you have in something like financials. So outside of the defensive groups, right, I think industrials and financials really need to keep trending well. If tech's going to give up leadership here, right, we need that rotation, and we need more pro-cyclical, risk-on, offensive stuff kind of participating, right? I don't want to see rotation out of tech, out of growth, and into only defensive sectors, utilities, staples, real estate. I don't think that's good. I don't think anyone who's bullish would want that, right? So I think industrials and financials more important than ever amid this weakness and growing weakness from tech growth, et cetera. So here we have percentage of financial stocks in the S&P 500 above their 50-day moving average at cycle highs. It's about as good as it gets. You're at 90%, right? Percentage above the 200-day, same thing. This is as good as it gets, 90%, right? So these readings are just pinged to the strongest level. Next chart. The new highs, not bad, right? The most new 52-week highs that we've seen this cycle since early 2021, when the market peaked and rolled over. That was an exhaustion reading. Is this an exhaustion reading too? I don't know, JC. Not getting confirmation from internals at the new highs, but we don't really overthink divergences in these. So next chart. No new lows. I mean, literally none, zero. That's how good this space is right now. Even the regional banks not making new lows. They don't look great, but they look okay. Big banks look fantastic. Insurance companies continue to, be one of the strongest subsectors of this entire bull market. Capital markets, brokers, dealers.
Hold on. I think we need to look at 1 and 3 month lows, particularly with what a ghost town those are, right?
Bang. As good as it gets. New 21-day highs. We haven't seen this kind of a high reading since coming off of the COVID lows. Really stands out. Right? So the strength beneath the surface for financials, wow, you don't want to lose it. I think it's really important that we don't lose it. There were some big red candles in financials at the end of last week. We don't want to follow through.
We got a big one this morning, Steve.
Yeah, is it that big? It's not that. It's not.
No. Ally. They were speaking at a Barclays conference, I guess, and they talked about credit concerns. I'll read you the quote.
15%.
Credit challenges have intensified due to high inflation and weakening employment. Retail auto credit challenges evident in increased delinquencies and non-performing loans. So maybe that subprime auto bubble thing is finally starting to come to fruition that they've been talking about for like 7 years.
This is a $10 billion company from Detroit. It doesn't matter.
Oh, stop. Ally Financial.
We're talking about Berkshire Hathaway, Goldman Sachs, JP Morgan. You're talking to me about this piece of shit from Detroit.
Listen, the used car market got weird a few years back.
Because it's small doesn't make it irrelevant.
I think by definition, it does.
There's
actually.
information there. Look, subprime auto loans, I don't think are going to ever break the system. But you could see some companies falling some rough times from it.
Yeah.
Cars are way too expensive. Just a few years.
Detroit had their time.
People are going to be underwater on their cars, straight up.
They are.
Like, you're paying like 7-8% interest rates to finance a car that was as expensive as a new car used. It didn't make sense for a while. I didn't have a car for a year because it was literally the market was broken.
I was listening to a podcast yesterday, and this person had $1,000 a month car payment. Although I don't know if that was for one or two cars. Regardless, $1,000 a month for a car is insane.
I overpaid for mine, and I swear, if I got it a year earlier, it would have been absurd.
I don't buy. You don't buy cars. You lease them.
It's been something similar though. You would still be paying high prices and higher interest rates back in the
buy depreciating assets.
I mean,
you just resell them when you get
most people don't buy most cars for investment. They buy them. It's a
you lease some, you borrow it, you give it back, you get another one. That's how to do it.
Whatever. All right. Can we talk Apple?
Hold on. I got one. Can you please put up slide 10? Because this is on Strazza's point about financials and the market needs industrials and financials like you wouldn't believe. I think this chart further reiterates exactly what Strazza is saying. We're looking at high beta versus low volatility hitting new year-to-date lows. Just for some perspective, the high beta index is half technology, 50%, it's 47.5% technology. It's another almost 20% consumer discretionary. So 3/4 of the high beta index in the S&P 500 is just tech and consumer discretionary. Financials, by the way, are only 5%. Energy is 0%. Industrials are actually 13%, which is larger than you would think. SMCI, largest component of the high beta index. Nvidia, AMD, Broadcom, all up there as well. On the flip side, the low volatility index is led by Berkshire Hathaway, Coca-Cola, Marsh McLennan, Procter & Gamble, Lind, which is the largest materials company. 22% financials, 12% industrials, 7% tech, just for perspective.
Yeah, it's an interesting
15% staples also, by the way.
Look, I think we've both been mindful of not sounding too bearish about the defensive leadership that we've seen over the past couple of months, right? Because it's not the end of the world. But if you get that defensive leadership,
just don't buy the defensive leadership if financials are making new all-time highs on both an absolute basis and new 52-week highs on a relative basis. Like that just doesn't scream defensive leadership to me.
Yeah, so let me finish my point because I agree with you. I think if we have all this defensive leadership, but we're not losing the risk-on groups like industrials and financials, it's okay. But if we're losing all the risk-on groups at the same time that we're getting that defensive leadership, then I'm thinking about it differently.
Strazza and I are agreeing way too much this show, so I want to apologize. It's not what I intended.
No, neither of us want this.
He's just not saying dumb shit today. So, maybe we'll be back to dumb shit tomorrow. I don't know. We'll see.
Well,
but
maybe the day off helped.
I'm agreeing a lot with Strazza, actually further reiterating the points he's already making. Agree with all of that. Steve Strazza, we have a debate tonight. I have one hell of a track record so far this year on these debates. Tampon Tim at -300. Can we take a look at some of these prop bets?
Wait, what did you just say?
If Trump says Tampon Tim -300.
JC, what are you talking about?
Throw up the prop bets. These are the prop bets for tonight's debate. I won $750 on the last one because I had China.
Stop. This says braggadocious.
Yeah, if he says braggadocious +600.
That's in his vocab now?
Wait,
Trumpism? Dude,
I thought that fake news media was like so 2021, right? Like,
well, it's -300.
Some of these nicknames, it's so ignorant. Have you heard the new one, Kakala?
No.
You know what that's?
If he says Comrade Kamala, that's -300. Go up. What about Elon Musk mentions at 1.5 for the over/under?
Okay.
Under.
This Elon Musk thing, this new special committee, dude. That sounds.
I think you take the under
disaster.
on the Elon Musk mentions. You got to take the under.
That is such a bad idea, by the way.
What is?
The Department of Government Efficiency. Did you see his tweet the other day? He's having fun with it, tweeting Doge memes.
So what do you think? So the under 1.5 mentions of Elon minus 210.
Oh, Bill in the chat. I want to know. You said get Bruce on. Was that a Bruce Frazier request? Because if so, I think you're right. I owe that man a call, and I don't think we've ever had Bruce on the show.
We'll get Bruce on. Bruce on. Hold on. Let's see. We got so the poly markets got Trump at 52%, Harris down to 46. So that's huge swing.
Spencer, try and stay with us. We'll keep it short.
And then hold on. So then here's the poly market, right? And then if you go to the predict it, it's very different. So as soon as Harris started talking, like all of the trends changed, I guess it looks like. So here you could see Trump catching up on the predicted. I thought that the predicted was more right leaning and poly market was more left leaning, but that's actually not the. Doesn't Peter Thiel own poly market?
How can I still don't get how these markets can be right or left leaning, but I don't really want to know.
I'm not 100% sure.
Spencer. Fantastic.
I don't know how they work. I just have no clue, but I don't understand it. But
if this is
poly market's the more liquid one, and it's also DeFi. It's also decentralized, isn't it?
I don't care.
So it leans libertarian. Is that what you're saying?
Jesus.
Well, it's owned by Peter Thiel, so probably yeah, right.
Okay. Here's what I'll say. You're gonna get some movement here tomorrow, and look at the stuff that is moving pre-market tomorrow. Those are the election trades. Right?
You'll see it on. You'll see the 24-hour markets tonight on Robinhood actually, which I'll be taking a look at. Can you throw? Speaking of Peter Thiel, that's not
super liquid. That's not super liquid.
Look at the banks. Watch the banks.
It's liquid enough, Spencer.
Is it?
You're right. It's not super liquid, but it's. Speaking of Peter Thiel, anybody?
Steve, take your flowers.
Take your flowers, Strazza. You've been all over this.
Look, I was all over it 3 years ago too, and it took a long time. So this is just a stock that I've liked for a long time in a long-term portfolio. They're doing all the right things, turning profitable. This is a business completely unique from any other, and I think you have to be involved. This is for the IRA all day.
Wow.
Just put it away. Tuck it away in there. This is basically all-time highs. This is the breakout to all-time highs. We talked about
Spencer, this is a good example of like the Strazza's patented move. It's not that patented, but his classic move of putting a stock he likes away in the IRA and then buying the call options as the kicker.
You trade the legs. Because look at how orderly this uptrend has been. Art Hill was just on here. All of our smartest technician friends that come on here, what did they say? The same thing about trading. Buy weakness in the context of primary uptrends. Look how orderly this is. If you bought some calls and loaded up at the right time, use some VWAPs from the pivot highs to kind of pick your spots. You bought calls and rode these legs higher, then you're making money along the way too.
Hard to argue with the chart. We got Mr. Patrick here in the green room. Should I bring him out?
Bring him out.
Bring him out? Oh, and then there were just two of us.
And then there were two. How you doing?
Where they went? What up, man? How we doing?
Oh, good.
Hi, Pat.
What's up,
going
Pat?
on?
We're partying in California next week or what?
We are. We sure are. I'm very excited for it. We got a busy week.
We still don't have
some Vietnamese. Can we get some Vietnamese food, please?
I think we did that last year, right? With Brian.
We should do it again. They got Mexicans down there too. We should get some chilaquiles.
Oh man.
What's the best chilaquiles spot in but you're in San Diego.
JC, you'd be disappointed, man. I'm not a huge chilaquiles. I can't even pronounce it. Chilaquiles. Yeah.
You're like
I don't think I've ever actually had it. I've seen them a million times, but
it's aggressive in the morning. It's an aggressive breakfast, but I respect it.
It is an aggressive breakfast, but if you don't have it for breakfast and you have it like maybe for late night munchies or something like that,
isn't it a breakfast food though, the chilaquiles? Or no?
Technically, okay. Like you've never ordered breakfast for dinner or had late night breakfast. Come on,
it's great. It's great.
I know. Mexicans do it too.
Mexicans do it.
Pat,
Pat, what do you got? What's on your mind?
well, I want to ask you about like what you saw yesterday on the socials regarding Apple. Did you see anything interesting there?
I mean, more so just the fact that it wasn't like a huge reaction or positive reaction to that news. But I didn't watch it too closely. It's more people just talking about all these Head and Shoulders out there. Whether we're talking semis or Microsoft too, that's a really clean one, especially in a weekly chart. But I mean, you guys know better than anyone. Is this really going to be a top? I mean, if so, this is going to be the most well broadcast top out there. And of course, it would be terrible if semis did complete that Head and Shoulders top.
Terrible for who?
I mean, well, terrible for longs, terrible for anyone who bought into that AI trade.
Terrible for stock market bulls. Terrible for owners of risk assets. Like that's what who. Wise guy.
Just throwing the question out there.
When tops take the shape of a Head and Shoulders, they tend to get more play, right? More airtime.
Yeah.
Okay. So this one, whether it's SMH SPY or SMH on Absolute, you can draw it in that really sexy way. So it tends to be all over the internet. Like, are you seeing these charts everywhere? Everybody's calling for a top or no? Are people calling for
I mean,
failed
everyone's seeing it. It is interesting that people kind of have the same view we do, where it's like, okay, if this thing fails, it's super bullish. You do see a lot of people kind of waiting for that because we've seen so many of them.
Which is fair.
Totally. I mean, I don't know if you guys remember NVIDIA this time last year had the same thing. It rolled over into this multi-month Head and Shoulders top. And of course it wasn't. And that kicked off a beautiful leg higher. So maybe this is the catalyst for the next leg higher. I know it's kind of funny to think that a Head and Shoulders could be the catalyst.
We've seen it
before. Head and Shoulders top is my favorite continuation pattern.
Right. Exactly. But I think a lot of, maybe novices out there might see that and be like, oh, it's a Head and Shoulders top. Like, and us three see that and we're like foaming at the mouth.
It's one of those things like when you go to technical analysis kindergarten, like in the first week, like, like my daughter's in pre-K. So they teach like the colors and the days of the week and shapes and stuff like that. Like Head and Shoulders top is kind of like that. Like when you like pre-K for technical analysis, like this, one of the first thing they teach you. It's easy to remember because it's like head and shoulders, knees and toes, eyes and ears and mouth and nose, head, shoulders, knees and toes.
Yeah. Couldn't have said it better.
Hey, spend a long weekend at the beach more often. I love your mood today.
It's magical place,
you guys are
man.
agreeing?
I know it sucks.
But Strazza, I really liked your take on the whole rotation thing, and
you need some good stuff to hold up, right?
Yeah, I mean, I don't want to know what this market would look like without financials doing what they're doing. So that's
wow. Listen to Pat. He doesn't even want to know this market without the financials. Old school, baby. Love it. Love it.
Yeah, you don't have bull markets without financials, and it's hard to have bear markets when financials are leading.
I do think it's funny though. I mean, when you guys were going through your charts this weekend and you saw some of these staples, I mean, these things look like semis, like something like Philip Morris.
Is Walmart really a consumer staple? Come on.
No, I'd call it a discretionary.
Is Costco a consumer staple? Come on.
Bro, Costco should be
is Target? What is Target?
Portfolios?
Yes. That I'll give you, Strazza. I see what you did there. I see that. I see what you did there. You're right.
BJ's not good though. BJ's broke down on me. I got out. I had so
you don't
much
like BJ's. Hope. Some people do.
I had so much hope for BJ's to look more like Costco, but it's just looking more and more like BJ's.
All right.
Hey,
we can recess.
Let's do some recess. Talk about future proof. Can't wait to hang out with you guys.
Talk to me, Strazza. What do you got? Talk to me about your lack of sugar.
First, order of importance. Matt Millam in the chat. DM me. Let's set it up. Let's do it. I would love to get out there while I'm out there. So shoot me an email or DM me and we'll talk about it. Love to play some golf. Maybe we'll get Patrick.
Matt, just close your eyes whenever you see Steve swing.
No, I've gotten really good. I promise.
Heard that before.
Secondly, Pete's Pasta I don't want to be too salesy here. I would grab the box and show you. It's Pete's Pasta. It's a big red box. They're incredibly expensive. 7 grams of net carbs. JC, I'm telling you, I'm bearish this whole space, right? All the chicken crust pizza, all this stuff. It's always terrible. But I will continue to try, right? The new innovations, because people are out there trying to do big things, trying to figure this out. The chickpea pasta stuff, you can't do it. The whole wheat pasta from back in the day, it's a no. It's a never. Pete's Pasta? Dude, so we did like a tomato Alfredo, a little bit of chicken, a little bit of broccoli, and then you boil it. It's not quite there. So we had to kind of nurse it a little bit. We had to nurture it. So we threw it into the pan with the tomato Alfredo sauce, got it in there, worked it a little bit. JC, I cannot tell the difference. Like, we had a breakthrough last night. Very excited at my house. I think
Steve, you're in the arena, aren't you? You're in the pasta arena.
You're trying things.
You're trying things.
No, but so non-flour pasta is something I've tried time and time again in my life. My grandma used to try to give us like the whole wheat pasta. There was a whole thing back then. It was trendy like 20 years ago. It's always been a no. It's always terrible. This is the first time. Like it was so legit. I couldn't tell the difference. Like, it doesn't taste like homemade pasta. It's not going to be the best noodle you ever had.
7 net carbs, but how many gross carbs?
It's just really good. Don't overthink it. It's so much better nutritionally.
But when it comes to but net carbs,
it
how many
shouldn't
gross
break,
carbs?
But it shouldn't break your keto. Here's the thing.
Give me the gross.
So I was explaining to JC, when you do keto and you get into any form of ketosis, if you have like a pasta night, right, for a cheat day, you feel terrible the morning after. Like, you literally feel hungover. So it's like not worth it to even, so like your cheat days get ruined in a way. So you eat the foods that you love to eat and then like you feel terrible and awful about it. Like, it doesn't work. Yeah. So if you could find a way to use your cheat day on something that's still relatively low carb, I think this works and achieves that, then you don't feel like crap the next morning. That's all I'm looking for. I don't want to feel bad when you eat pasta. I want to feel great.
Agreeing with Strazza again. God damn it.
This pasta made me feel alive last night, and I feel great today.
So happy for you.
We're thrilled for you, Strazza.
Pete's Pasta.
Pat, JC, you got anything?
Just want to give a shout out to New Jersey. Big shout out, New Jersey. Underrated. Underrated.
I like it. I like it.
Hey.
No, my only recess is excited for next week. We got Future Proof. I got a conference up in San Francisco right before. I'll be doing a panel with John Bollinger and Linda Raschke. We're going to be talking about reminiscence of a stock operator. So that'll be a good time. If you're in San Francisco, come stop by.
And this is, what's the name of the organization again?
The TSAA.
Yeah. Great guys over there. Great guys over at the TSAA. We were just talking about Bruce Frazier.
Yeah, I know. I heard that. Bruce is awesome.
Yep. Didn't Strazza give a presentation there after pulling an all-nighter in San Francisco? Didn't that happen a few years ago?
Strazza, that was I give you credit for that.
No, Strazza pre-keto.
2 hours. 8:30 in the morning.
Speaking of next week, it just as a PSA, we're gonna be taking the week off from the morning show because the guys are all going to be in California and they're not going to want to wake up at 5 in the morning, I think, to do this. So,
so the whole week we're just canceling programming.
We got Portfolio Accelerator.
Yeah, we got San Diego and Chicago in the same week.
Did we must have canceled a bunch last year when we all went.
By the way, we are close to we're close to next Thursday. If you're in the Chicago area and you're not coming to the Cubs game with us, my understanding is we may or may not have an extra ticket or two.
Fun stuff.
So
I got an email about this. I got an email about the Cubs game literally 3 minutes ago. Okay, if you're in the Chicago area and you want to come to the Cubs game next Thursday, the 19th, I think they're playing Washington. I don't really remember. Email us info@stockmarketmedia.com. Just put Cubs game in the subject. If you're in the area and you want to come, we might have room.
But you have to tell us a funny joke, otherwise you ain't coming. You got to in the email. You got to make us laugh. If you can make us laugh, you increase the chance that you get to come. How's that?
Can I just say how much I fucking hate the Eagles?
Right. Sure.
You know, my daughter the other day, because our nanny's an Eagles fan.
Wait,
my
the
daughter
band or
the
the
other
team?
day, she goes, "But Daddy, we like the Eagles like a little bit, right?"
No.
I'm like, "Hell no, we don't like the Eagles even a little bit. Hell no."
I wouldn't let my kids hang out with them if I were you.
Well, I'm in the AFCs. The Eagles don't bother me. We're not an Eagles fan at all. Like
Listen,
my
JC,
daughter literally asked me if we like them a little bit. I was like, hell no.
JC, you're in Eagles country.
I'm close. Am I though?
How could you
Closer
live
to the
there?
Meadowlands than I am to
That's-
my father-in-law
that's
grew up a Giants fan, Jets, New York,
Okay.
Yankees, Mets, Rangers.
All right, so New York sports well represented in your neighborhood.
I'm further south though. I'm about 45 minutes south of my in-laws, so I'm closer to Philly. They're
Okay.
closer to New York.
All right.
Yeah.
Gotta be some big neighborly rivalries there.
I mean, we got people from
Giants fans.
Dude, I got Gators. I got Gators in my neighborhood. Florida
Oh,
Gators.
Ooh.
I know. Nice folks though.
All right. I'm wrapping it up. We got Twitter Spaces with the chart report in an hour. Chart request live at 1 o'clock right here on the channel. Thanks to our guests today, Arthur Hill and Pat Dunuwila. Thanks to everyone in the chat. See you guys later. Go make some money. All right.
YOLO
Peace.
responsibly.
Later.
Adios.